So hello traders, welcome back to another analysis video. So today I'm going to do a breakdown for you on the markets that I've been watching. Last week I didn't execute any trade. I didn't have any good opportunity. Similar to this week, somehow I don't see like if you have any good opportunity. And one thing I constantly remind myself is there is a time to do nothing. There's a time to just stay out of markets and wait for the markets to at least give you something. If you look at price action for most markets that I personally trade, last week we never saw much big moves. We're heading towards the election. It's 22 days towards the election, so it's expected again that the next 2-3 weeks markets will really become silent until the election passes. And that's when now people will start paying more attention to what the market is likely to do. So this next 3 weeks, I think 3-4 weeks, don't expect too much volatility. However, don't expect a perfectly dead market. There are other factors that still move markets up and down, but don't expect too much to come from the markets. So I'll start off by looking at gold. There's a very good fundamental case for bullish gold prices. A combination of factors, one being the ongoing Middle East tensions, Israel, Ukraine, Russia, Taiwan, China, Iran, Palestine, Lebanon. These countries are all in conflict, and we're living in an environment whereby you could wake up and hear Israel has attacked Iran. We could wake up and hear China has invaded Taiwan. There's a lot going on from a geopolitical perspective. And I think in such an environment, investors want to hold some gold. So I tend to believe that gold is likely to keep moving higher, probably to the 3,000 mark, I think, on the upside. On the weekly chart, you can see last week we tried going lower, but we quickly came back to close very strongly up. About 26.50. So today we've opened, we're trading around the same price. If I look at it from the daily perspective, you can see that markets have somehow come from the fair value area back to 26.50. We're approaching R1. So I think if the bullish case is to continue, prices could come back to R1, possibly R2, 27.25, 27.50. And on the 4-hour time frame, we somehow have this flag formation, which is suggestive of prices continuing to move higher. So you can see this beautiful flag formation that was formed last week when prices came back down to retest this 2600 level before they started moving significantly higher. So that is also another setup that you need to be paying attention to. So you can see prices moved higher. They've now rejected R1, or maybe we could move lower, maybe we could move higher. But the risk-reward proposition for me is not there. The direction probably is intact, but the risk-reward proposition is not there. So no trade for me on gold. So gold is a no-go zone for me, at least for now, waiting to see if the trend is still intact and if opportunities will pop after the trend moves higher. Next, I look at euro-dollar. So euro-dollar is also a very liquid market, a market that is traded by very many traders. So let me first look at euro-dollar. So looking at it from the weekly perspective, last 2 weeks we've gotten corrections. The euro has been moving higher slightly slowly. If you know how currencies move, they tend to trend in a very slow manner, unlike commodities and indices, which can take a path and just move in one direction for a very long time. Currencies tend to move in slow multi-year trends, whereby a trend is there, but it's we have deep pullbacks, but the trend still continues. I think the trend here is to the upside. The euro could trade to 1.15 very soon. If I look at it from the daily perspective, you can see that prices have somehow corrected from the fair value area to trade as low as the S3 mark. I'd be waiting for a move above 1.1 for me to be fully bullish, but I expect prices to somewhere turn around these levels, 1.0875 being the precise level I'm looking for. So if you come back down to the 4-hour time frame, you can see this crucial level that I've marked here, 1.0875. That's the liquid level I'm watching for potential longs in the market. and I think also a potential change in the face and the direction of the market, but I'll be waiting to see what will take place there. Next, I'll look at dollar against the yen. So dollar against the yen. So if I look at it from the weekly perspective, the dollar against the yen had started getting weaker when the yen reversed their policy and the dollar started hiking rates, not hiking but lowering. However, we've seen a move down. We got some support at 140 and it looks like we've gotten a correction back to 150. If we close above 150, I think we could easily retrace to 155. However, I think the trend is still to the downside. I don't think there's a valid case for this trend changing. I think there's a high chance that this market will still continue declining lower. So if we see a move back to retest this trend line and a move back below 150, we could get the market continuing to move lower. On the daily time frame, prices have somehow moved from 140. As you can see, we moved higher, rejected on 45, had a move lower, then came back all the way to the 150 mark. So we are currently trading at 150. We break 150, we visit 155, which is the next upside target. But I don't see us going beyond 155. I think there's a very good short cycle coming in this market very, very soon. If the trend to the downside is to continue, and I think there's a high chance the trend to the downside will continue. So on the 4-hour time frame, you can see that, just a minute. So on the 4-hour time frame, you can see that the market has rejected 150 in line with R2, and after that, we are likely to see prices starting to collapse and move lower. Next, we'll look at pound against the yen. So British pound against the yen. So if you look at it from the weekly perspective, you can see that the market has collapsed from 205 back all the way to 185, rejected on 85. Now we're at 195. You can see the formation last week suggestive of prices continuing to move lower. On the daily time frame, there's a potential flag correction here that I'm watching. Potential sells at 197.5 here. If you can get a good bearish signal around those levels, I'll be looking to short, looking for the markets to at least decline, come back lower to 190. On the 4-hour time frame, you can see clearly where prices are. We've just bypassed 192.5 here, and it looks like we're going higher, 195 I mean. So if we move higher towards 197.5, I'll be looking for a potential short, looking for the markets to continue declining and moving lower. So that's my outlook on pound against the yen. And to sum it up, I can look at the dollar index, which is still the king in the currency market. So if I look at the dollar index, let me just see the dollar index. Yeah, so this is the dollar index. So I found it finally. Yeah, so this is the dollar index. So if you look at the dollar has been moving lower from a weekly perspective, big picture thinking, just getting an idea of what prices have done. So you can see prices came lower, found support, started moving higher. This looks like a correction to me. I think evidently the trend is still to the downside. I don't see any change in the trend. If you look at it from the daily perspective, you can see that the market has just rejected 100 and we are somehow moving lower, potential correction. And then the markets will continue moving lower. So I think the trend is still to the downside. It's just a question of figuring out clear entries as the market turns and starts moving lower. So that's my outlook on the dollar. That's my outlook on the different currencies. No beautiful one direction trades, but at least you need to get a feel of what markets are doing as you wait for that beautiful trade. So with that said, I'll stop there and we will catch up next time. Peace.